This video covers Hitachi's first quarter financial results for FY 2025 from April to June 2025. Hitachi, originally known as an electrical products company, now operates across information technology, energy systems, industrial equipment, and infrastructure, focusing on digital solutions and social innovation. Recently, Hitachi has attracted attention as one of the so-called Takaichi stocks. This term refers to companies that could benefit if Sanae Takaichi, known for her aggressive fiscal policies and support for military expansion, becomes the next prime minister. First quarter results and fiscal year 2025 outlooks. In the first quarter, revenue increased by 2.1% year-on-year, while net income rose 9.6% compared with the same period last year. In the energy sector, the power grid business, providing solutions for safe and efficient electricity delivery, performed strongly. In the mobility sector, the railway business all showed strong performance. Despite challenges from foreign exchange fluctuations and U.S. reciprocal tariffs, adjusted EBITDA, which shows a company's operating profitability, reached a record high, and free cash flow increased significantly, mainly due to large advance payments received from major projects. The progress rate against the annual net profit target is 27%, marking a strong start. For the full year 2025 outlook, short-term risks, such as the impact of U.S. reciprocal tariffs, are expected to persist. However, demand for digital and green transformation is projected to continue growing over the mid to long term. Despite increased strategic investments and potential tariff risks, revenue and profit are forecast to grow, supported by business expansion. Hitachi organizes its business into four main segments: Energy segment, Mobility segment, Digital Systems and Services segment, and Connective Industries segment. Energy segment covers power generation, transmission, and grid systems, providing technology to support renewable energy and stable electricity supply. First quarter revenue increased 8% year-on-year. The power grid business remains strong due to continued demand for transmission upgrades and connections to renewable energy. Mobility segment develops and maintains railway systems, including trains, signaling, and control solutions, supporting safe and efficient transportation infrastructure. First quarter revenue increased 19% year-on-year. Growth was supported by steady performance in signaling systems projects and the acquisition of French Thales' railway signaling-related business. Digital Systems and Services segment focuses on IT solutions, digital transformation, and Lumada-based services that support industries and governments with data, cloud, and AI. Hitachi's defense business is part of the Digital Systems and Services segment through its Defense Systems division, which provides radar, communication, command and control, and surveillance systems to the Ministry of Defense. First quarter revenue decreased 3% year-on-year. Domestic digital transformation and modernization projects progressed steadily, raising orders received, while overseas operations faced challenges from tariffs, competition, and project delays. The Connective Industries segment offers products and solutions that support factories and cities in improving productivity and sustainability. Some defense-related technologies, such as aerospace equipment and measurement systems, are also included in the Connective Industries segment. First quarter revenues fell 4% year-on-year, while orders rose, driven by semiconductor equipment and other solutions. Weaker demand for elevators and escalators in China had a negative impact on performance. Within Hitachi's businesses, the Defense Systems division is still relatively small, but it has significant growth potential due to rising national defense demand. U.S. reciprocal tariff impacts. In the first quarter, U.S. reciprocal tariffs reduced profits, though Hitachi Energy mitigated direct impacts through price pass-through. Tariffs are expected to continue affecting earnings, but strong long-term demand for transmission upgrades and installations in North America helps support the overall business. For fiscal year 2025, the annual outlook already reflects these estimated risks, with projected tariff impacts of 30 billion yen on adjusted EBIT and 35 billion yen on net income after countermeasures. FY2025 forecast. Hitachi expects mid to long-term growth in demand for digital and green transformation, despite global uncertainty caused by U.S. tariffs. Annual revenue is expected to increase by 3% year-on-year, while net income is projected to rise by 15.3%, reaching a record high. Hitachi has announced a historic $1 billion investment in U.S. manufacturing to support the country's energy future by producing critical grid infrastructure. The investment, backed by the Trump administration, responds to rapidly growing demand for transformers and high-voltage equipment driven by the expansion of AI data centers. Of this, $457 million will fund a new power transformer factory in Virginia, the largest in the U.S., supported by the governor and the state's congressional delegation. Hitachi expects this investment to drive growth in revenue and earnings and strengthen supply chain stability. Stock price. This chart over the past year shows the stock price in Japanese yen at 4,052 as of September 16. This chart shows the stock price in US dollars at 27.92 as of September 15. The US stock price has experienced significant fluctuations at times due to a stock split. The upward trend has continued over the long term. Current PBR is 3.17 and PER is 26.0. Dividend yield is 1.05%. The dividend yield is calculated based on last year's dividend, as the 2025 dividend forecast has not been disclosed. Compared with past PBR, PER, and dividend yield, the current stock price is relatively high, reflecting market expectations. Many Japanese stocks have become relatively expensive compared with the past few years. Conclusion. In the first quarter, growth in revenue, net income, and record high EBITDA, despite challenges from U.S. tariffs and foreign exchange fluctuations. Energy and mobility performed strongly, while digital systems and services and connective industries faced headwinds. Mid to long-term demand for digital and green transformation is expected to drive growth, while strategic initiatives, including a $1 billion investment in U.S. power infrastructure, aim to strengthen supply chains and capture opportunities. While still in its early stages, the defense-related business is expected to improve over time.